What's going on, everyone? Welcome back to another week of Mind Over Markets. Thank you all for tuning in today, whether you're here live, whether you're watching this back on a recording. I always appreciate your presence, and I'm looking forward to delivering another session of hopefully some value for you guys to allow you to find some improvements in your mindset, some consistency, and of course, the thing that we're all working towards, better performance in the markets. We can see we've got someone, Darwin KFEA. What's up, my friend? Hope you're doing well. Thank you so much for tuning in. I've got a very, very good session in store for you guys today, and one that is, again, very fitting with things that I am currently working through at this point in time. Around this time of year, I always like to do kind of an end of year reflection. Now, this, in all honesty, wasn't something that I always did from the very, very beginning. I think it would have been far more beneficial for me in my early years had I started it sooner, but it wasn't. It was something that I neglected. And today I want to sit down and I want to talk you guys through kind of a rough framework of what I work through in terms of my end of year performance review to determine how I can improve, how I can be better for next year, because I believe that this is constantly a game of personal development. I believe that there is no top to this mountain. There is always someone that is doing this at a better level, and your job is to just consistently improve over time. So this session is going to be broken up into two parts. And the first part is going to be directed towards those of you that are maybe still trying to find your path to consistent profitability. And again, to reiterate, and something that I've talked about a lot on my sessions, consistent profitability isn't making money every day, every week, every month, every quarter. Right? Losses, periods of drawdown, these are all very, very normal things, and one that I'm honestly going through at this point in time. I closed November down. Those of you following me online will know exactly where I'm at with things, but it's a very, very normal part of this practice, and they're nothing to shy away from. They're nothing to be worried about. As long as you're doing all the right things, they are just a statistical part of this game, which you have to manage in order to be able to come out to the other side and to get back on the path that you are working towards. So part one is for those of you, right? Those of you that are still struggling to find that path to consistency and are trying to find how to get profitable in the markets. The second part is going to be geared towards those of you that actually have that path to consistency and actually you could trade pretty well, but you're finding there's a little bit of a glass ceiling above you. You're finding the scaling process quite difficult. Maybe it's a certain level of capital under management that you're struggling with. Maybe it's certain position sizes that you're struggling with. There are various different aspects to this, but I think both of these parts together are going to give you guys a great framework in terms of not just discovering how to find more consistency and a better performance behind what you're doing to give you that profitability, but also giving you that roadmap to actually find out how to unlock those barriers long-term to allow you to scale to work at your highest possible potential. That is always the objective of what we're doing in these sessions. Now, I'm going to be completely honest. These end of year's performance reviews, like I said, I didn't always do them at the start of my journey. There was something that I neglected for many, many years. And till date, I don't find them the most interesting or loving part of my trading that I delve into. I am quite a data-orientated guy. I love journaling. I love spreadsheets. I love crunching through numbers. But I find the reflection process generally quite boring. However, the one thing that keeps me doing it and keeps me coming back time and time again is because, hands down, these reflection periods are what led me to my biggest breakthroughs. These are the times where if you're doing all the right things in terms of your journaling and collecting data, this is where all the gold really is. The patterns that you'll discover, the things that you'll notice about yourself, the way in which you can prove your edge in the market by the things that you're becoming aware of, these are the things that are really going to help you to reach all new levels. And I want to reemphasize, I'm not a perfect individual by any means. I still take losses. I still go through periods of drawdown. I still make mistakes. I still miss opportunities. I still don't believe I'm operating at my top performance in terms of where I could be. And in all honesty, I think that's always going to be true. And I've come to accept that that's probably a healthy mindset to have, because it never makes me neglect or be reluctant around my process of improvement over time. Now, one thing I do want to clarify before we dive into this kind of performance review is on a day-to-day and week-by-week basis, I do have reflection periods, but they are very different to what these quarterly, biannual, and annual reflection periods are like, right? There's a philosophy that I think everyone needs to be on board with. And again, those of you that I think have found your path to profitability, this will come as no surprise. For those of you that are still trying to find your path to profitability, maybe this is going to sound a little bit different to the things that you believe you know or the things that you understand about the market so far. And that is on a day-to-day basis, the outcome of each and every individual trade that you take. I really don't believe that there's anything to learn from that experience. I'm not saying you can't improve. I'm not saying there aren't lessons and things that you can go away and you can test. But from each individual trade, I don't believe there's anything to learn from the outcome of one. Because when you really get clarity on understanding what an edge is over time and discovering that edge in the market, there is only one thing that is true. And that is your edge can only be present over a large sample size of data. It's completely possible to do everything wrong and to make money, and to do everything right and to lose money. That is the short-term variance in terms of the probabilistic game that we choose to play each and every single day, right? But the reality is, if you are serious about finding an edge, something that's scalable, something that's repeatable, something that's going to make you money over a long period of time, it's only found in larger sample sizes. And so my reflection on a day-to-day, week-by-week, and a month-by-month basis, it's a really simple version of kind of what we're doing here, but really dumbed down, right? And that dumbed down version is really just aimed at discovering one thing. Am I being consistent with my plan? Because if I am, then the short-term outcomes, the wins, the losses, the good streaks, the bad streaks, whatever they may be, they are really irrelevant. They're just short-term noise and probability. They are no different to me flipping a coin up and down, calling heads or tails, sometimes being right and sometimes being wrong. But when I come to quarterly, so like every 3 to 6 months or so, and especially like we're doing now, kind of an end of year period, I then think it makes more sense to look back over a much larger sample size of data and start asking yourself, what were the patterns behind what I experienced? There was something that happened in this one trade, and I've noticed that it also happened here, 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 and here. Can this help me maximize and get further upside in my winning positions? Or could it help me to minimize my downside in certain positions? That's where your patterns are found. That's where your edge is really improved. And so these reflection periods shouldn't just be done at the end of the year, but they have to be done in the right way with the right things in mind. In the short term, they should be based on consistency in terms of your plan. In the long term, start looking for those patterns, start looking for those ways to tweak and refine your process over time. And I think if you have a combination of both of those things, it really sets you up to succeed in the long run. Okay. So we're going to start with the side of reflection for those of you that are still seeking profitability in the markets. And honestly, whether you're watching this and you fit into one category or the other, it doesn't make any difference. There is no shame in either direction. There are challenges on either side, but there are different roadmaps that I believe you should follow depending on where you are in your journey. So let's get stuck in. I want to talk you through the things that I kind of reflect on and work through. And again, things that have really helped me to find a lot of big breakthroughs in terms of my career and things that I'm actively going through at this point in time to help me improve my process, my mindset, and ultimately my performance in the long run. Okay. So for those of you, part one of this, those of you that are still trying to find profitability, I think the obvious question, and again, those of you that are familiar with my sessions, you'll know I've talked about this idea a lot. This is something that I ask pretty much every single one of my clients that I have a one-to-one session with, often or usually in the first session. The underlying question that basically creates everything in terms of your performance in the long run is, do you have an edge? Do you actually have an edge in the market? And within, I would say, 5 seconds or so of asking someone that question, it becomes very easy to determine whether they're actually making money consistently from the markets or not. Because if you know you have an edge, you have data, You have some substance to prove that your trading plan, your strategy, your approach to the markets, you have something to prove that it actually works over time. When you're not sure, when you don't have clarity, when you have to stop and think and wonder, do I actually have an edge in the market? Chances are you probably don't. Or at least you're not going to have the confidence to stick with that edge, which is what we're going to move to in the second part of this, right? But start with this question. If you're struggling to find profitability, sit down, be completely honest with yourself, and ask yourself the question, do I actually have an edge in the markets, right? Because there are a lot of traders that believe they do, but they don't really know. They've tested something a few times and they've seen that something works, or they've taken something at face value that they've seen online or learned from some course or some mentorship, and they've started applying it and they believe this is just their edge. What you have to understand is your edge is really comprised of a couple of different things, right? It's the strategic element in terms of what you're supposed to be doing on paper, but then it also relies on you as the trader to actually be able to execute it. If that edge doesn't suit your personality, if it doesn't suit your lifestyle, then you've got a problem, right? Even if something works on paper, if it doesn't work for you as a person, then I always like to say it doesn't work at all. So start with the simple question. Do you actually have an edge? And I try and make this as clear-cut as possible. An edge has to be something that's repeatable. It has to be scalable. It has to be measurable. And I think the often overlooked one is it has to be simple. It has to be clear. You need to be able to describe it. I always like to give my clients an exercise to ask them to describe their edge in one sentence, right? Just completely dumb it down, describe it in one sentence. I find that if it's often not clear enough to get you to be able to simplify it to that degree, then sometimes you're overcomplicating the process. I know so many traders that are looking for hundreds of different variables to align before they can get in and out of the markets. And by the time that they've finished looking at all the criteria that they need to be met, the trade opportunity is either gone, or they look at the charts and they're more confused than they were when they started. And that's also not a great place to be. So I think your edge has to be simple enough that you can look at the charts and actually have answers rather than questions. And this is something that, again, a lot of people tend to miss, right? There are going to be a lot of people that when they sit down and they ask themselves this question, they're actually going to start to realize that maybe I don't actually have an edge in the market. And that's not a bad thing to be aware of. It's actually a great foundation. Not kidding yourself to believing that you have something that works and that you know it works is a good place to be in, because now you can start fixing that problem. So I always say to people that if you're going to tell me with confidence that you have an edge, what I want to know is I want proof that your edge actually works. And the only way you can really prove it is with data, is with examples, is with experience of seeing something play out over and over again that you know statistically over a large sample size is going to work. Just creating that foundation is going to be the cornerstone of everything that you need to find profitability in the long run. Because the honest truth is, I pride myself on helping traders largely with their psychology. That is the niche area that I operate in. And I put a lot of emphasis and a lot of importance on psychology. But the honest truth is, if you don't have an edge, there is no mindset in the world that is suddenly going to produce consistent profitability out of nowhere. That's the truth. And so when I choose to work with people on a one-to-one basis, they have to fit the requirement that they actually have an edge first. I don't teach a strategy. I don't teach some formula of getting in and out of the markets. My job is to simply make you more consistent and allow you to operate as closely as alignment as possible with what your edge is supposed to produce on paper. But this is the foundation, right? So everything has to start here. And if you're struggling to find that edge, again, there are 3 areas that I think you have to be considering. You have to find something that technically, strategically, fundamentally works over a large sample size. And again, that should be able to be proven with data over time. It has to also align with your personality. There's no point trying to force yourself to be a swing trader if naturally you're a shorter term trader, or vice versa. And then lastly, it has to fit in alignment with your lifestyle. There are going to be many people that are watching this that are maybe not full-time traders. Maybe they have jobs or businesses, or they have a busy home life. Maybe they're a single parent. Maybe they're a stay-at-home parent and they have to look after the entire household. Whatever it is your role is at home, in the house, with your family, it has to work in alignment with that lifestyle. There is no point having an edge that is technically sound on paper, but it requires you to be at the charts between 9 a.m. London time and 11 a.m. and you're at work during that period with no access to actually jump on the charts. It doesn't make any sense. Like I said, it goes back to this idea that if it doesn't work for you, then it doesn't work at all. So start by just getting really, really clear on what your edge is. Start by proving, not to me, not to anybody else, but prove to yourself that over a large sample size, it works. And when we talk about large sample size, I'm not talking about 10, 20, 50, 100 trades. Think in hundreds and thousands, right? That number is going to be different for everyone depending on your approach. But the two criteria that I often give most people when they're trying to find their edge is you want to satisfy two parameters: a large sample size of trades, and again, think hundreds and thousands, but also over a large sample size of time. You might find that a scalper maybe takes 10 trades a day, and therefore, in the space of 10 trading days, they could accumulate potentially 100 sample size, 100 trades worth of a sample size at testing if something works. Now, whilst you might be getting into sort of good territory when it comes to a sample size of trades, your time frame at which you're testing it in and the market condition variance during that time is probably not going to be that wide. You want to be able to end your period of testing and data collection, and you want to be able to answer certain things like, what conditions does your edge actually perform best in? Or maybe what conditions does it not perform best in? What are prime conditions to actually be able to walk away and say, you know what, this is the time where I'm better off preserving capital at this point in time and not doing anything? Because I think there's a lot of traders that think their edge has to mean that they constantly find opportunities. Actually, what I find it's actually the opposite. You get very, very specific in what you're looking for. And actually, you have to learn to sit on your hands until those specific conditions start to align, right? So if you actually have an edge, the first area that you can start to reflect on is this: how good is your edge? Does it actually exist? How many times did you actually get to execute on your edge this year? Were conditions suitable for your edge? These are all things that you can start to reflect on, but start by creating this base. You need absolute clarity, absolute confidence that your set of criteria for getting in, for managing, and for exiting a position over a large enough sample size of time will actually allow you to make money. Okay? If you've satisfied the first condition, right, of finding consistent profitability, and this is, do you have an edge, right? Answering that question saying unequivocally, yes, I most definitely have an edge in the market. The only other reason as to why you might not be making money, if you have something that makes money on paper at least, is your ability to consistently apply that edge. This is where a lot of people fall short. And this is where, in all honesty, 80, 90% of my one-to-one clients kind of fit into this category. They have a strategy that they've tested, they know it works, but they seem to be unable to be consistent with it. Whether it's because of their lifestyle, whether it's because of their personality, whether it's because of their inability to accept the probabilistic nature of the market, whether it's their emotions getting in the way, whether it's boredom getting the best of them. There are a variety of different reasons. But those of you that do have an edge but are not getting the results in alignment with what it should be producing, you will probably fall into this category, right? And that is, are you actually being consistent with your edge over that large sample size of time and trades? Now, this gap which is created between what your strategy should produce on paper and what you're actually returning over time, this is specifically where I operate. This is what I like to call the performance gap, right? The difference between what your strategy should be doing versus what you are actually doing. My job is to help traders to understand how to minimize that gap as much as possible. I don't often or ever really advocate the idea that this is going to go down to zero. You may do it for periods of time, but consistently, us being human beings, unless you've coded your strategy to work without your manual intervention, if you are someone that manually clicks the buttons, there is likely always going to be a performance gap over a large sample size. It might be life emergencies, it might be mistakes, it might be missed opportunities. It might be just a lack of focus or a poor night's sleep the night before, but something is going to get you to slip and create that performance gap. And your job is to try and make that gap as small as humanly possible, right? The reality that I find is that inconsistency kills more people's performance than actually a bad strategy. Because I remember in my early years, and I've shared many times, my first 6 years in the markets were horrendous. They were inconsistent to say the least, but every year I ended pretty much down. I had periods of time where I made money. Some of that was honestly just due to luck. Some of that was actually having a pretty decent strategy. And the problem is I screwed it up for myself because I didn't trust probability. And the moment it lost for a period of time, be that a week, a couple of weeks, maybe a month, the moment I went into that period of drawdown, I presumed the strategy was broken. I presumed I had to fix and change something. And that's where I constantly ended up going wrong. Okay. Now, for those of you that are inconsistent with your approach, you may find that you fall into this situation for a number of different reasons. It may be in terms of your risk management, maybe in terms of how you apply things. It may be in terms of how you enter, how you manage, how you exit positions. And what you are likely to find when you are not very process orientated is that you might find one undisciplined day can erase days, weeks, and months worth of hard work going into growing and compounding an account over time. For those of you that fall into this category, your goal for 2026 is not about finding a new strategy. It should really be about reducing deviation. It should be about becoming more consistent to the strategy that you have and accepting that it's not going to work all of the time. This is part and parcel of the game that we play. Okay, so some reflective questions that you want to be asking yourself over time, if you're in this category, is how often did you break your rules? Was it once a day, once a week, once a month, once a quarter? How much did that rule break actually cost you? Right? Start actually quantifying this so that you can make your bad habits a little bit more painful. What emotional state was present when you started to break those bad habits? Was it anger, frustration, boredom, sadness, loneliness, happiness, excitement, overconfidence? The more and more clear you get on the state that you're experiencing, the thoughts going on in your head, the story that you're telling yourself, the more you will start to be able to understand the patterns in your behavior of what is causing you to be inconsistent, right? You want to be able to identify the triggers behind what you are doing. Not just the fact that you did break a rule, but why did you break the rule? What led you to get to that place? Often for a lot of people, like I said, the big one is if you have a lot of clarity in your plan and it's something specific that you're looking for, certain conditions, a certain pattern, a certain type of setup, often the killer for a lot of people is just boredom, right? It's the inability not knowing what to do when there is nothing to do in the markets. And I find I often say, and I share this idea that a good plan tells you when to get into the markets. A great plan tells you what to do and when to stay out, right? Those are often the most important moments. It's not identifying the good setups. It's actually staying out of the low probability setups in the meantime. I always call boredom the silent performance killer. And it's one that I think affects most people without them really being aware of it. But the moment you start to actually reflect on what was my emotional state during this period of time, it becomes a great way to bring this to the surface. And by the way, all of this pattern recognition in this sort of area, it does really rely on you having those journals, those bits of data that you have collected over the space of the year to make this reflection period actually useful for you in the long run. If you're someone that has neglected your journals, if you're someone that hasn't kept a well-detailed log, or maybe you've only been recording outcomes, but not the process that went into the decisions behind those, you're going to struggle to find answers to these situations, because the reality is the human mind, our memory, it's very, very limited. The exercise I always give most people, if I asked you what you had for lunch yesterday, you'd probably be able to tell me. But if I asked you what you had this time last week, maybe you'd have to stop and think for a few minutes. And if I asked you this time last month, or 3 months, or 6 months, or 12 months ago, how accurate would your memory be around that specific situation? And if you can't even do it with lunch, how do you expect to do it with trading, right? So make sure you keep those journals. I'm a fan of using online journals, whether you want to use your own Notion template. I use a platform online called Edgewonk. I know there's a lot of people that are a fan of TradeZella. I think there's another one called TraderSync. There's a variety of different options. But one of the biggest benefits that you guys have in the space in which we're doing this is you guys have the Darwinex platform, right? You guys can look at some of your metrics from there, and they should start to give you at least a baseline of things that you need to be aware of in terms of discovering patterns of behavior, in terms of statistics of how you performed. You should know that if you're a scalper and your average hold time is bordering on hours, days, weeks, you're doing something wrong, right? There are very obvious statistics that you can start to look into to start seeing those deviations from your plan. And they are going to be available from the platform in which you guys are using on a day-to-day and week-by-week basis, right? So start to get serious about these reflective questions. You don't just want to know that you've been not consistently sticking to your plan, but you want to have clarity as to why you're not sticking to it. Now, you see the two of these areas together, if you really focus on true reflection period, honesty during this time for both of these areas, I promise you over time, you can find a path to profitability, right? If you simply answer the question of, do I have an edge, and having absolute clarity and confidence in terms of what that is, and then discovering your own patterns of behavior, which are showing you how to be consistent with that edge, you're now discovering the kind of overlap to find that level of profitability. Because everyone that loses money, they will fall into one of those categories as to why they are losing. Either they don't truly have an edge and they're kidding themselves to believe that they do, or they are lacking the ability to be consistent with that edge. You need to get very, very specific on what's causing you to stray from that path of profitability, and then go tunnel vision in on actually fixing that part of your process. Okay. So I'm hoping for those of you that are finding that path to profitability, that those of you that have maybe had a little bit of consistency throughout the year, maybe you've had 2, 3, 4, 5 months of profitability, but then you've had a few months where it's really set you back. And then you come to the end of the year and you've either broken even or maybe lost money. This should be a little bit of a blueprint to get you to figure out, how do I find at least the things to work on to help me to find that path to consistency. Okay. Now, I think the last thing that I want to mention of this, these two parts, discovering your edge and finding out if you're actually being consistent with them over a large enough sample size. And again, I think a yearly reflection is a good one to do this on, is to get very, very clear on what the patterns are that are keeping you from finding that profitability. Now, these may come from the side of things where you're reflecting on, have you been consistent with your plan? But being very, very clear on those patterns of behavior are going to give you the awareness to actually start breaking free and changing those patterns in the long run. It might just be very, very simple little things like, are you entering trades too early because of FOMO? Are you holding your trades for a short period of time when actually you could be getting much more out of them had you just held them for a longer period? Are you avoiding certain trades that you're feeling hesitant about but actually end up working? Are you finding yourself oversizing or undersizing depending on the outcome of your last few trades, right? These are common patterns that you want to be aware of that will cost you money over time. And they are just very, very simple things that can take a perfectly good strategy, one that actually makes money, to a break even or a losing one, right? So get very clear and actually ask yourself, what are the top 3, top 5, top 2, top pattern that is keeping me from profitability this year? And then you want to get specific and ask yourself, what patterns actually supported good behavior? What kept me consistent with the things that I should have been doing? And what mistakes or what patterns existed that actually created the highest performance gap in terms of my results in the market over the last 12 months or so, right? Once you get very, very clear on those sorts of things, what we're really doing here is just developing a higher level of self-awareness, because that's truly what these sessions are about. They're just a period of time to get to know yourself a little bit better, to figure out how you can be more consistent with your edge. If you don't have your edge, start there. If you need that consistency, everything should be about discovering those patterns of behavior. Right? So going into next year, as I touched on, those of you that are finding that path to profitability, your focus over this Christmas period and New Year period, where I'm hoping you're going to take a little bit of downtime from the markets, is not to come up with a variety of different strategies that works all the time, based on a sample size of 10, 20, 30 trades. You want to start focusing on larger sample sizes. You want a good positive expectancy through a large sample size of time and trades. You're not looking for perfection. You're not looking for consistently only hitting one outcome, but you want to make sure that you're testing things over a large sample size of time and trades to ensure that you're going to have clarity as to what you should be doing next year. Okay? When you go into next year with that level of clarity, and you can simplify things to just say, I definitely have an edge, and I know exactly what kept me from being consistent with it this year that I'm going to be changing next year, it's going to put you on a more linear path to finding the success that you're looking for. Okay? Part 2 of today's session, and we're flipping things up now. So for those of you that are looking for that path to profitability, this is something that most definitely you can be keeping in mind, because this is going to be very, very relevant for you at some point in the future. But for those of you that already have that degree of consistency, maybe you're making some money, but you know that there is more that you could be making, right? This is for the profitable traders that are ready to start scaling up their progress in the long run. I think that there are certain things that you should be focusing on that will allow you to not just maximize your upside, but minimize your downside. And also prioritize your mental headspace, right? These are going to be the 3 areas that we're focusing on at this period, or for this section. And I think it's really going to give you clarity as to how you're going to be scaling up in the long run. Okay. So I think the obvious place to start is start by actually looking over your best trades, right? Go over your journals, look at your best performing trades. And sometimes, by the way, your best performing trades are not necessarily going to be the ones that made you the most money necessarily, but maybe they were the ones that felt the most effortless, the ones where you had the least amount of mental friction in actually executing your system. What was it about that situation that made it the best possible trade? What you'll often find is usually some of the best trades that you make are the ones that were completely in alignment with your plan and where you did absolutely everything correctly. But the best trades are going to reveal how you operate at your peak performance more often, because over a large enough sample size, I believe patterns will emerge to everything. It might be something to do with the certain market conditions that you work best in. It might be identifying market conditions that are best avoiding, and you did a good job of actually sitting out of those conditions, right? Sometimes the best trades are the ones that you don't take, right? If your strategy, if your trade plan can get very, very clear at filtering out good and bad market conditions, sometimes the best trades are the ones that you will not take. Some of the things that actually go missed by a lot of people is the thing that makes you perform at your very best is actually, maybe it was the quality of your mind on that particular day. Maybe you had a really good day. Maybe you were coming back from a breakaway and you were really, really refreshed. Maybe you were feeling in the best of headspace to be consistent and execute with your plan. What is it that led to those conditions, right? For me, being able to scale and go up to the next level, it means starting with understanding I need to do more of what is working well at this point in time, right? So some things that you want to stop and reflect on during this period are just asking yourself, what made these trades actually work out so well? Was it a particular type of structure? Was it a particular time of day? Was it a particular session that I was trading? These are all things that you could start to look at. Maybe it was the mindset that you're in. Maybe it was the decisions and how clear your mind was in order to be able to make some of those decisions, right? You want your mind to be clean. You want it to be calm. You want it to be, in a state that makes doing something repeatable very, very easy, right? So just take an overarching approach to stop, take a step back, and actually ask yourself, what are the common traits that existed in my best trades over time? You might stop and look over your best 5, 10, 20, 30, 50 trades over the space of the year, again, depending on how many trades you've actually executed over this time. When you get very, very clear on exactly what is working well, and you can see that common pattern in each of the trades that you are taking, it starts to unlock a new level of not just confidence, but a way to scale up your performance over time. What you may discover is just certain things like every time I put a trade on that does work in my favor, it actually only moves, 10% of the way to my stop loss before going immediately in my direction, right? These are certain statistics that you can start to be aware of as a way to start minimizing your stop losses and therefore increase your risk to reward on the upside, right? You may find patterns in your best trades whereby they were your best trades, but actually they could have been so much better had you started to target a different area, a different level, a different price point, a different area of structure, volatility. There are a variety of different ways to do this. One of my first clients was a big fan of using pivot points. Not one that ever really sort of blended well with me, but he swore by them and made good money from doing them, right? And again, there was nothing special about what he did. It was just consistency to one thing over time. You have to discover what that is for you. And the best way to do it is actually start by getting clear on what is working well over a period of time. Okay. After you've done this, it then makes sense to flip the script. Actually look back and go over your worst trades, right? What are the mistakes that you made that you could potentially start to fix that is going to help improve your performance in the long run? Now, for some people, those worst trades, they're going to be monetary. For some people, they might be mental. They might be things that you experienced over time which just did not lead you to be in a good place. I find when you start measuring both of these things, it's going to help you to identify certain things to work on to, again, allow you to improve that consistency in the long run. Because I believe your worst trades, they're going to be reflective of times where maybe you lost discipline. Maybe it's times where your impulsive thoughts or emotions actually got the best of you. Maybe it's just going to reflect certain conditions that could have been avoided. This is one that, again, being completely transparent is very, very real for me. One of my biggest struggles and things that I am constantly working on is trying to identify the shift from one market condition to another, right? And this is something that I have been observing over the last couple of weeks at the moment. For those of you that are trade FX, pull up a weekly chart of euro, right? Have a look at a weekly chart of euro and have a look at its performance since around July onwards of this year versus its performance from January to around July, right? The first 5 to 6 months of euro were very clean. They were trending in a nice direction. There was a lot of volatility in the market. But from July, August time until date, have a look at the performance, right? Completely different market conditions. And so when I look at my lackluster performance, especially I would say overall this quarter, it's very clear that a big part of that has been from trying to execute my edge in conditions which just weren't really prime for me, if I'm completely honest. And again, my reflection period is going to be about how can I get better at identifying these conditions in real time that will allow me to just quicker step back or step away or, maybe reduce my risk. Because by reducing your bottom line, protecting your downside, it increases your overall profitability, right? There are two ways you can make money. You can make more money on your winning trades, or you could lose less money on your losing trades, right? We are operating businesses here. we bring in revenue and we have expenses. If you can expand revenue or minimize your expenses, you have the ability to actually find a new level of profitability. Okay, so these are things that you guys can be focusing on, much like I am most definitely during this period. You want to be asking yourself those questions around your worst trades to figure out those patterns of behavior that got you to where you are during this time, right? It might be reflecting on the mindset during that time period. You may have found that actually the London session was your worst one because you slept well, or you're going through a rough patch with your partner and you've been arguing with them every morning before you get on the charts, and evidently that's having an impact in your performance. It could be a variety of different things. You may have had a new baby recently, and the baby has caused an inconsistency in terms of your sleep and rest patterns, and this is impacting how you're performing during the London session. Until you understand the patterns in your mindset that you're bringing with you into the charts each and every day, it's going to be very, very difficult to fix those in the long run, right? Maybe the things that you're going to be reflecting on when it comes to your worst trades is looking at the rules that were broken. You may find that there is, something that happens once a week, once a month, maybe once a quarter, and it costs you 2, 3, 4, 5 times, what a normal loss would cost you. Why is that happening? Why did a specific rule break? Why did your mentality break down? You want to be able to identify what pattern emerged from that particular period of time or those periods of trades that you are looking for. Once you get clear on what's going wrong and what's potentially causing some patterns behind some of your worst trades, you can then ask yourself the obvious question, which is, how can I set a boundary or build a wall between how I should be operating and the person that I end up acting like when I have all of these bad trades, right? So what repeated mistakes did you make throughout the space of the year that actually held you back from performing at a much higher level than you are doing now? Okay, so we've looked at both sides of this at the moment, which is reviewing your best trades and reviewing your worst trades and figuring out what patterns existed between them. Now, the one that I actually like reviewing the most, and again, very, very fitting for the niche that I work on with a lot of people, is actually looking at your mindset, your energy that you're bringing with you into the charts. And this is irrespective of the outcome of each and every individual trade. You want to start thinking about what you are bringing with you to the table in terms of what's going on up here or what's going on in here in terms of energy, emotional bandwidth, mental clarity, stability in terms of your routines. These are all things that start to drain you, right? The best way I heard this summarized is we as human beings, we generally operate like batteries, right? For those of you that have a smartphone, I have an iPhone. I'm a big Apple fanboy. You will know that if you ever try to use your phone on, like 2-3% battery, it doesn't really operate right. It's sluggish, it's sloppy, things are slow, things lag. But when you use your phone just after taking it off charge at 100%, it's smooth. It works absolutely amazingly. And we operate the exact same way, right? Every time we make a decision in our day, in the markets, it's like 1% of our battery being drained. And this is why there is actually some logic behind the idea that you should do the hardest parts of your day very, very early on. Because if you don't get it done first thing in the morning or at the start of your day, your decision-making ability, your willpower, it's all going to be drained towards the end of the day. And you're going to find that you have a lot less self-control, willpower, motivation by the end of the day, and you're just not going to get certain things done. This is also reflective of how we operate in the markets. You may find that the start of your day might be the best in terms of your discipline, but actually that fades throughout the day. For myself as a swing trader, I tend to find, especially when I have positions running and I'm watching them play out over the space of the week, towards the end of the week, I'm starting to get fatigued. I'm starting to get attached to certain positions. And I need that little bit of break and detachment over the weekend to get me back to a point of equilibrium, right? So it's not necessarily about what trades you're taking. It's the mindset that you're bringing with you to the trades that you are taking. You want to be able to understand what drains you mentally, physically, in terms of that energy. And so you actually want to be able to sit down and you want to take a moment to reflect on what actually drained my energy this year. And you'll be surprised. Sometimes it's things that are unrelated to the market. Sometimes it could be things related to your personal life, to your relationships, to your family, to the quality of your job or your business that you run outside of trading. There could be a variety of different things. It might be little things like moving country, moving house, planning a wedding. I don't know, right? There are a variety of different things that you may find that take your eye off of what you should be doing. Maybe it's certain things like just spending too much time on the charts. Maybe it's I've been watching too many markets and I need to specialize in just a few. Or maybe I've been too focused on one market and I need to broaden my horizon to not try and force conditions where they're not present in this year. Maybe I've been trading too long and not given myself a break. This is a big one I find for retail traders, because the moment you become your own boss, you are responsible for managing your own mental well-being. And if you're not giving yourself that time away to reflect, reset, you're doing yourself a disservice. And this is something that I'm trying to prioritize and take very, very seriously this year. I have found that between my trading and my coaching in this last quarter, things have been very, very busy. And so for the first time in as long as I can remember, I'm trying to have almost a full 3 weeks where I properly switch off. No coaching calls, nothing to focus on in terms of taking active positions in the market, and just allowing myself to take a little bit of step back and to reset over the Christmas period, where I do a little bit of a deeper reflection. Okay. So understanding what drains your energy, very, very important in terms of consistency. And then on the flip side, much like we've been doing here, you want to ask yourself the opposing question. What actually kept me in a flow state? Did I prioritize my sleep better this year or this quarter or the last 6 months or so? Was I more structured in terms of how I manage my time? Did I time block and use like a Pomodoro timer every time I needed to do some work, for example? Did I only focus on taking higher quality setups? Did I ensure that I was strict with like reducing my screen time and stepping away when there was nothing else to really do? So this section is all about figuring out like what energy habits must be prioritized. Maybe they must be fixed. Maybe they must be tweaked or worked on for you to operate at your best mental state. Because the honest and raw reality is, I'm a firm believer in the idea that it does not matter how good your strategy is. It doesn't matter how much money it makes on paper. If you are not in the right mindset to actually be able to execute that strategy or just allow your strategy to do its thing, you will find a way to mess things up, right? You will actively find a way, consciously or subconsciously, to mess things up over time. So this is looking at these 3 areas: your best trades, your worst trades, and how your energy operated over the space of the year. This is what's going to allow you the path to identify how you actually start to scale up over time. Because when most people start thinking about scale, the obvious thing that comes to their mind is, I must just increase my position size. I need to do the exact same thing that I'm doing now, but I just need to increase my position size. If you don't have the structure in place, if you don't have the right mentality going into that scaling period, it's going to break. And so I always like to say that scaling starts with your process before it starts with your position size. So you want to be making sure that you can effectively sit down and say, am I emotionally or mentally going to be able to handle this size of loss or win after I scale my position size, right? This is all part of your path to scalability. If I have decided that I'm going from 100,000 in capital under management to 200,000, is that something that you're actually ready for? Are you ready to deal with the P&L swings that are associated with that, both on the downside and the upside, right? You need to be acceptive of the losses, but equally, you need to be okay with the money that you're going to make. There are so many people that don't get that balance right, and they find inconsistency as a result of an imbalance from one of those areas. Either the loss sends you on tilt, or the win makes you so overconfident that you end up giving the money back anyway. So that emotional and mental stability after a loss or a win is very, very important when it comes to your scalability in the long run. One that is often not spoken about, but I find is actually a large factor when it comes to scaling over time, is actually your risk model, right? Your risk model, we're not just talking about your position size, that's the one we've already touched on, but actually how you manage and what you aim for in terms of your trades, right? And this is specifically for traders that operate a strategy that have a relatively high risk to reward, right? On a smaller size account, holding a trade for maybe 1 to 3, 1 to 5, 1 to 10 times your risk might be easy to do. But you have to ask yourself, is that a scalable approach? Because right now, risk that I'm deploying into the market might be maybe $100 per trade, maybe $500, maybe $1,000 per trade. And you might be comfortable at that level. But if you get to a stage where you're operating, 100,000, 500,000, $1 million in capital, your position size is going to change. And you have to ask yourself, is that risk model still sustainable over time, right? If I had to risk $10,000 in a single trade, and my strategy says that I aim for from here to here, and that is reflective of a 1 to 10 risk to reward, am I going to be okay with that? Can I watch a $10,000 position go up to 50 and then back down to 30,000 and then up to 70 and then right back down to 5 before reaching my $100,000 target for that position? Because the truth is, if your model breaks down there, it's not sustainable. It's not scalable over time. And this is why I find that the right blend of finding scalability and consistency in your trading is not just having these, flashy win rates or risk to rewards. It's finding the balance that actually works best for you. I find traders that operate from a degree of focusing purely on high risk to reward, whilst it can work well in your early days, it makes it easier to grow small accounts in maybe a quicker space of time. You often have to take, lower win rates as a result of that. And you have to be prepared for the idea that this may not be sustainable when you get to a certain period of time. If you lower your if you lower your risk to reward and your win rate doesn't subsequently increase for any reason, then actually you're breaking your model of profitability, right? And on the flip side, you might have a strategy where you have a much lower risk to reward, but you have a higher win rate. But you may find that actually the normal periods of drawdown or losing streaks that you may encounter, they really, really knock your confidence because you're used to winning at a certain level. And when that stops happening, you completely crumble and fall apart, right? So you want to make sure that you can reflect on your ability to be able to scale both from a position size and a risk aspect in terms of how you are managing your strategy, okay? To kind of summarize what we're talking about here in terms of your scaling path, you want to ensure that in order to be able to scale effectively, you need to be making fewer mistakes by prioritizing that mental capital. You want to have higher intentionality behind what you're doing. You want to be more conscious. You want to be more present behind what you're doing. And you want to make sure that you have awareness of your state at all times, right? The story that's going on inside of your head. Because before the bad action, before the impulsive, habit that starts to take place, it all starts up here. It all starts in the mind. If you want to change your actions, you have to start by understanding what the story or the narrative is inside of your mind going forward. Okay. So take some honest time to sit down and look over the good, look over the bad trades, look over how your energy is being expended, and actually ask yourself what parts of my process are actually already set up to be scalable and allow me to continue to grow and compound accounts over time. What needs to be fixed before I start to increase my size, right? Maybe it's my routines. Maybe it's my sleep. Maybe it's a variety of different things. Maybe I need to improve my relationship with my partner to ensure that I'm in a better headspace before I get up to the charts each and every day. Could be a variety of different things, right? You also want to have a contingency plan. What happens if things start to break along the way? What do I need to prioritize? What can I be prepared for? The more and more prepared you are, the better your expectations are going to be, the less likely that you're going to be doing something silly over a certain sample size of time. Okay? So this is the reflection process that I have used myself over different periods of time throughout my journey as a trader. I started with path one, which was, do you have an edge? Do you have an ability to be consistent with it when I was trying to find profitability? But more so in this day and age, I am finding that I'm focusing more so on the latter. How can I focus on scaling? How can I focus on doing more of what is good and what is working well and less of what is not working so well? And I think the big one for me, as I've already mentioned to you guys, is really trying to create a better filter between the type of market conditions that I'm actually getting involved in over time. Okay. So for you guys watching this, whether you're live, whether you're watching this back on a recording, I want you to figure out which path that you need to follow and then take the necessary reflection steps over the coming days and weeks going forward to give yourself the best odds of finding that consistency in the long run. Regardless of where you are in your journey, whether you're still working towards profitability, whether you're focusing on scaling beyond and, to all new levels, the more and more you can be present and be aware of your patterns of behavior when it comes to either your execution or how you're managing yourself mentally, physically, whatever it is, that's where your best growth is going to be found in the long run. Okay. So once you've finished up this reflection period, I want you to just end and solidify things by just simply asking yourself one question. What is one commitment that you're going to make to yourself that you're going to carry forward into 2026 that is going to be able to change and mold your identity for the better? Okay. What is one commitment you're going to carry forward into 2026 that will change and mold your trading identity forever? Okay. That is a wrap for today's session, ladies and gents. Thank you all so much for tuning in again, whether you're watching this live, whether you're watching this back on a recording. This is going to be our final session for the year. I'm sure many of you probably guessed, judging by the topic and nature of today's discussion. As I mentioned, I am going to be taking a few weeks of downtime for myself. I'm going to be diving into a reflection much like this. I've actually already started to analyze and break through and look over my patterns of behavior as well. And I'm hoping to come into 2026 with complete clarity on how I can work on scaling to all new levels for myself. I hope you guys take this seriously because, like I said, these are the points, whilst they may not always be the most enjoyable, I promise you they will lead to some of the biggest breakthroughs that you guys are looking for. Okay. If you guys do have any questions, as always, or if you have challenges or hurdles that you want to see me speak on, or you're struggling to figure out how to get through, make sure you drop a message in the Darwinex Discord. Right, you can tag me in your comment. I'll be sure to frame future sessions around this to help to give you guys more of what you're looking for, and hopefully help you to unlock all new levels in terms of your performance. Risk 1% says, great talk. Hope you end your year good and profitable. Thank you so much, my friend. Same to you. And I hope you have an amazing Christmas period. Right. That is all for today. Thank you guys so much for tuning in. I hope today's session was valuable for you guys. I hope you all have an amazing Christmas, an amazing New Year. I hope you all get some downtime. Again, very, very underrated and neglected for most traders, but definitely needed during this period of time. And I look forward to speaking to you all again in 2026. Thank you guys so much. Take care.